The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
I can't hear anybody talking. I wouldn't be able to hear anybody calling in, I don't think, to ask any questions. So tell me what I should do. Oh, well, that's typical. Welcome to the world of radio, folks. This is Larry Pesavento for TFNN. Having my usual technical difficulties to start out the week. I finally came back to Tucson, Arizona, and I'm going to be here for quite some time. And I really don't like the technical part of the computers and stuff. So anyway, that's good. Anyway, the first chart I put in here today is the cash S&P. We completed a ABCD pattern on Friday. We were a little lower last night, about 10 points lower in the S&P. And then when the DAX opened in Germany, that's where it all started. The German DAX took off and was up almost 1.75%, I believe. And that's what really started the move going. We went up and we made a 61% retracement here in the S&P, and we'll see if that's going to happen. We won't. I don't believe that we will have a crash from this level. I think if we have a crash, it'll be from a lower level because things don't fall off a cliff. They fall off a ledge, they stay on the ledge, and then they fall off the cliff. So we have to wait and see what happens with this over the next days. There's a strong bias for December to be up in an up year, especially during this holiday season with the Santa Claus rally. And then we also have the January effect coming in January, which is where the small caps, gain on the large caps. And the small caps have been far behind here this past few weeks because of the Russell has been under such strong pressure, to the downside. So it's interesting where we are here with this big move. If by any chance that we gave up all of this gain today, that would be incredibly negative. That means we just had a very, very shallow bounce, very quick short covering rally, and then the market would be heading to lower level. But that's 4 hours away, and we could be making new highs in another 20 minutes. So it's still a little early to tell. But the first part of this is the S&P did make an ABCD correction from the high we made back in November. The NASDAQ, of course, made a higher high. It's been the leader of the pack the whole way. There's no question about it. But the thing that we wanted to mention is this Russell, because the Russell index, being smaller, but it does show that it's been the weakest, and we're due to rally, and we've already started to rally today. And we've rallied up to about the 61% retracement, on the Russell also. So these are normal corrections that we're seeing, in the market. But the one that I think is the most important of the ones we look at is the New York Stock Exchange Index. And what I did was I put the New York Stock Exchange Index over the NASDAQ to show, the relationship. And as you can see, the New York Stock Exchange Index topped in the end of November, around the 19th of November, whereas the NASDAQ went up for another a full month. That's pretty much what happened in 1999 and 2000. We topped in the end of January of 2000 in the Dow Jones, and we didn't top until March 24th of the NASDAQ on that year. And, of course, we gave up 85% of our gains over the next 18 months to 2 years in the NASDAQ. That's when we had the dot-com bubble. But we don't have any bubbles this time because, we got strong capitalized stocks like Bitcoin and a few others. And now they're talking about Twitter is trading at 239 times projected earnings. That's a pretty good figure. I haven't heard that one for a while. So we do have some of that stuff floating around, but whether it means anything this time or not, we don't know. They're talking about what's going to happen with the Fed today with the FOMC. And, of course, they will be doing something, but I'm sure they're not going to tell us when they're going to be doing it. But we'll wait and see. I did have a request from one of our favorite call-in folks from Philadelphia, Mr. Z. He asked me to to describe how I found the butterfly pattern. That's something that I'll never forget. I was working with Bryce Gilmore up in our trading house in Pismo Beach, California, back in the around 1990, I believe, and he had a program called the Wave Trader that measured waves of similar move as it went through, and it compared everything, and it put everything in a triangle format, much like I do when I watch Gartleys and butterflies, and I kept watching this one particular pattern, and he had a scale from 1 to 10, and when it got to a 10, it would flash that the market was getting ready to turn. And what it was is every time that it hit a 10, it was usually making this beautiful, colorful butterfly pattern that was there. And my daughter happened to be walking by one day. She said, "Dad," she said, "that looks like a butterfly," and hence that's why I called it the butterfly pattern. And it has all the symmetry that a butterfly could possibly ask for. And when you get them, they work very well. But boy, when they fail, boy, they really fail. So you have to be able to be sure that you watch it very closely. You'll know when a butterfly fails when it exceeds the 1.618 expansion of any particular move. And we have not done that in the Dow Jones. We've done that in the NASDAQ, but we've not done that with the Dow Jones, or we never even came close to it in the S&P 500 or the Russell or any of the other indices. It was just the NASDAQ that was able to exceed it. Well, we've got a caller from British Columbia. Rick, are you there?
Yeah, how you doing, Larry? How's it going today, Larry?
I can't hear Rick. That's the problem that I have. If someone would type in his questions, he's asking the question. The problem is I am not able to hear what's going on. So he's asking a question about QQQ. So let me just bring it up, and we'll just take a look at the QQQ very quickly here, and we will see what we have. Just give me a second. And God willing, it'll take just only a second, and we'll pull this QQQ up, and I'll try to answer the question. Oh, he's asking a question about the head and shoulders pattern potentially in the QQQ. Yes, he's absolutely correct. If you'll give me a second, I have to update these charts because I've been gone so long. I'm on my big computer now, and that would be, we've had this huge outside day too, so that would really be, you guys are laughing at me, but let me tell you, boys, it ain't funny when you're under the pressure of the radio. I remember when I used to be a regular guest on the Johnny Carson show, I had the same problem. That's a joke, folks. I used to see the show all the time because one of the producers of the show was a friend of the family, and we were able to go to see Johnny Carson quite a few times, and were able to meet he and Ed McMahon, and that was really fun time. And they're really nice people. They're just really good people. They're since passed away, but those are the good old days. Anyway, that's what we're looking at here in the QQQs. We do have a potential for head and shoulders. The probability, though, is a little less because this is only a one-day head and shoulders. If we closed, if by some stretch of the imagination we would close in the low end of the trading range today, wow, you would really be, Johnny Carson is the Tonight Show, not the Today Show. Sorry, folks. That's jet lag speaking. Anyway, if we would close in the lower part of the range today in the stock indices and stuff like the S&P, the NASDAQ, I know there's 4 hours to go, but if that would happen, that would be incredibly negative. And just because of the fact that we hit the exact 618 today in the NASDAQ, and we hit the exact 618 today in the S&P 500, we didn't hit in the Dow. The Dow only made a 50% retracement. So those are the ones that we're looking at that point. I'm sorry, I don't think you'll even be able to call in today, folks. Not that we have too many at this time of the year, 877-927-6648, but frankly, my Skype is not picking up the other end of this. For some reason, they're able to hear me, but I'm not able to hear you folks. So I'll try to get that fixed, but I tried to get it fixed before, and that didn't work. I want to show you this pattern that we're looking at in gold on the short-term basis going over the last 10 days because I really wanted gold to be making a bottom here because of the timing was so perfect in gold. But we're completing a Gartley pattern in gold here at this 1250 level, and I want gold to be making a low here because of the FOMC meeting. It moves very dramatically in the FOMC meeting, and I'm not afraid, but I was assuming that it was going to be making a low down around the 1200 level, and we got down to $12.20, but then the market reversed and has rallied $25 a barrel. So this high that's coming in here on this full moon is most probably going to be a high of some sorts, and we could get as high as $12.90 on the move. But I really think we have a chance of testing that 1200 level one more time in the gold. So I'm waiting to see if that is going to happen. We've had a pretty good move in Singapore. Unfortunately, folks, I'm not able to hear anyone calling in today because my Skype connection will not allow me to pick up calls. I can talk through the calls, but I'm not able to pick them up. Unfortunately, I don't know what the thing is. But since the caller is our good friend from Singapore, William, and he's asking about gold, and so we're talking about it right now. And if we get, I'm looking for the market to possibly come down if I can get this daily chart up to show what we're looking at. Yes, this is what I wanted to show you. We have a beautiful squaring of price and time in the gold coming in on December the 18th, which is Wednesday. We got the full moon tomorrow, but if we could get one more move down to the level of around that 1180 to 1190 area, everybody's bullish gold now, folks, and this is not the time. God darn. Everybody is bearish gold now. I mean, it's about the largest number of bears that we've had. Nobody wants to own it. Even I think the only people left are Jim Rogers and a few other people. But John Paulson, the big hedge fund manager, has since liquidated all of his gold holdings. And very few people think gold can rally, but it still has a really good chance. And the reason why is it's held above this 1200 level for quite some time. We have a perfect ABCD formation coming in this week, either the 17th or the 18th. I was assuming it would be coming down into the FOMC meetings, and that has not happened as yet, but I still believe we have a chance. The same thing is true of silver. It's held the $18 per ounce level, and we're now trading at $20.26 per ounce level. So we've got a chance for these markets to turn. Whether they're going to turn or not, we'll have to wait and see if they're going to give us that opportunity, to buy it at a lower price, or they're turning. If they have turned, we'll have a big move, probably up around 1,300. Then we'll have a pullback. We got the Dow up about 120, S&P up 11, and the Nasdaq up 17.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I've posted into Tiger TV the Dow Jones Transportation Index to show you the complex top that is forming there with the 5-point reverse wave and then the 3-drive pattern. We're having a little bit of a rally today. It hasn't made the 61% retracement, but it's getting closer. And the main thing is we want to keep an eye on that because it's got a chance of rolling over up in this area. The Dow Jones Utility is far, far weaker. As you know, it's been in a downtrend for well over 9 months, and but that's a very small index, and it's more difficult to look at. Right after we have the break here, we're going to cover some of the foreign currencies because that's where the money that moves all these markets runs through, the Forex markets, and we want to take a look at the Japanese yen and the euro. One of the things I wanted to mention before we get to the break was the fact that many of these commodities have been in bear markets for a very long time, particularly wheat and corn and gold and silver and some of these others, and they have a potential here to have a little bounce in here, which could reduce some of the inflation expectations or deflation expectations that the Fed is so much worried about. The FOMC meeting today is a big meeting because this is Bernanke's last, this is a big farewell. I'm not even sure if he's even going to be at the meeting because he might even already, packed his office up and left because his last day is the end of the year. So he might already be on vacation taking, time off. But we'll have to, see what happens. He probably will not go to work for one of the big banks because he's a college professor, whereas Geithner went to work for one of the Wall Street houses because, he basically came as a banker, whereas Bernanke was a college professor. So it's going to be interesting how the new Fed chairman is going to fit into the whole program, but it should be exciting no matter what. The main thing that we're looking at here from a stock point of volatility, and that's one of the things that we're going to talk about, is the VIX index, because we've had a pretty good bottom made in the VIX index, and now the $64 question is whether we're going to be able to hold this bottom that we made around 12 and then we'll see if it's going to have a perfect. The fact that the VIX index today is up, folks, with the stock market up 100 and down, up 150 points, is truly amazing to me. That tells us that we're looking at higher volatility coming down the road. I've been saying that I think 2014 will be the year of increased volatility, and I still believe that is going to be the case, because the VIX index being up on a day when the Dow is up 150 is almost unbelievable, because it's supposed to measure fear and greed. And, if it's measuring fear, it's certainly doing it in a very odd way today. I frankly think this is just a big short covering rally, but, that's my opinion, and that doesn't mean a whole lot. However, we do have a ABCD formation forming in the VIX index. I'm going to put that into Tiger TV and let you look at it, because it forms a perfect Gartley in here that we'd be watching coming up around the 17 level. That would be the next level we'd be looking at in the VIX index. So if that's what the next price level is in the VIX that I'd be looking at. But we did hold that 12 level all during the time the market was making those complex tops up in here. If that's in fact what they were, then we'll wait and see. I have a question from one of our listeners about how will I know when I'm wrong about this top? Well, the two things would tell me that I was wrong. One is the New York Stock Exchange Index, the NYSE, would go into new high ground, because we have not taken out the high of November 18th as of yet. And if you take a look at the NYSE, and we'll do that right now, you'll notice that this is just an hourly chart going back, back into that November 18th high. And you see what we just did last Thursday and Friday on Trust Guide Decaphobia, the December 13th. All we did was we made a ABCD pattern absolutely perfectly. And the rally that we're having now is very similar to the rally that we had after the new moon back on December the 2nd. You'll notice that the market bottomed on the 3rd, and then it had the big gap up. If you'll see, it was the same type of gap that we had today, only even larger. It went up for another 8 or 10 hours, and then turned around and had made new lows. And so that's also the possibility that we could be looking at this time, is the same type of rally that we're looking at is doing exactly the same thing. That's what I try to do, is when I look at pattern recognition, is I look at what happened in the past and determine what is usually going to happen in the future. That's because that's what determines the future is what's happened in the past. Got Dow up 120, S&P up 10, NASDAQ up 15.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I want to go through a few currencies here because I think we have several of them that are really spot on as far as, time and price and everything coming together. And the first one I wanted to put in is the Swiss franc on the weekly chart because this market has been in a bear market for 6 years. We bottomed in 2011. We had a pretty substantial rally of about 20% after the devaluation of the Swiss, after that big brouhaha about the releasing of all the foreign information for taxes and stuff. But we've completed a perfect ABCD pattern in the Swiss on the weekly basis. Last week we hit the same number, 88.40, and we hit the same number again today, 88.40 again. It's held so far. So the risk on this trade is very, very small, and the potential, it has a huge potential to the upside. So that's something that you want to, keep in mind if you're looking to move money around. The Swiss has a really big chance. This is the first really major buy signal that we've had in this in the past year and a half. So this looks like a really, really interesting trading setup at this 88.50 level in the Swiss franc. Whether it holds or not, we'll have to wait and see. If it gets below the 88 level, then I would say this would be a failure, and we're probably going to drop a considerable amount more. But right now, as it looks like it's holding up, relatively well, given what we have. It's really great to be back in the United States, folks. I can't tell you how much it is to when you walk in and you see you're now entering the United States of America. It really makes you realize that we live in a great country. Got lots of problems like everybody else, but it's still, a really great country that we've had. I've had a request from one of our listeners to take a look at the IBB, which is the biotech index. And since we were talking about the butterfly pattern a little while ago with our friend John from Philadelphia, we have just completed a beautiful butterfly pattern a few weeks ago back on the actually it was on the new moon. And now we've had a little bit of a rally today, and we've had an ABCD down. But this is certainly a completed pattern. If this pattern goes up to make new highs, this would certainly put a lot of damper on anything that I've been looking at. But if you look at this a little bit farther, you'll see that it has some incredible symmetry with this, because the high to high and high to low, I should put this in because this is really a tremendous, just give me 1 second here to find the I'm on my old computer and I can't even find my toggles. That's a bad sign. Time to take a break, Larry. Traveling, I mean, when you get older, folks, traveling is not as much fun. Oh gosh, I got something great for you guys that travel a lot. They have a new thing for Homeland Security, folks. It's called what is it called? It's like Easy Pass. Once you travel a lot and you go through I guess it's profiling, you've got to make a special request with Homeland saying you'd like to have, it's called Easy Entry. That's what it's called, Easy Entry. And all you do is you show them your passport and it's marked, and all you do is you don't have to take off your shoes, your jacket, your underwear, nothing. You just walk through, you put your computer in your case, in goes through, and that's it. You don't have to do anything. It is really cool. It's just like the old days. It really is. And not many, the staff of the airlines do it. Not many people know about it yet. But if you travel a lot, it's something that you really want to do, because going through the airport is the biggest hassle of traveling. It's a real pain. And Sarah and I have put on 30,000 miles just recently, and believe me, it's so smooth to go through these things now without having to undress and be patted down and all the other stuff. So it's really good. Anyway, the IBB has definitely completed. That's the biotech index, has definitely completed the butterfly pattern on the upside. It's not going to go straight down from here, but there is a potential, very high potential, that this top is going to be significant, for quite some time. So this is the $64 question that we're looking at, is whether it's going to be just a few day rally here, like we had on the new moon of December the 2nd, or if we're getting ready to turn around to the downside. In fact, today, my biggest disappointment was today, because gold started lower Sunday night, and I really thought when it was trading around 1220 that it had a chance. It was right at the 61% retracement off the previous small move, and then gold started to rally, and now we've rallied, $25. And that's not very much. I agree with that, because of the fact that, we've got the Fed in there, and they can change, the way markets think about things in a matter of a few seconds. So once we get Wednesday out of the way, the 18th, then we'll take a look at it. We got the end of the year coming up. Whether that's going to mean very much to gold or not, I don't know. But I really think gold has a chance for 2014 to surprise some people, because the long-term weekly chart on gold is still bullish, because we held that 1170 area, which was the long-term weekly 61% retracement from 2008, and I thought we would retest that one more time, which many times that happens, and then away it goes. And if we don't retest it, that means it's just going to continue higher, and we'll have to buy it at a higher price, but I'm watching it. One of the things that we covered last week, if you remember, was American Barrick. That was the gold stock that we were watching. It was coming in right around the time of that new moon that we were talking about when I was in, where was I? Was I in Hong Kong then, or was I in China? I was in Hong Kong at that time, and we were completing a big Gartley pattern on American Barrick, and we've had a really nice move on that stock. It's moved well over 10% in just a matter of a few days, and that we've taken out the highs of last week, which is another positive thing that American Barrick has a chance to go work higher here. So the gold and silver are starting to show signs of a little bit of life on the upside. The whole world doesn't like them, which is good. That's what it's supposed to be. and you want to keep an eye on it. So if one of your favorite gold stocks or something starts to looks like it's going to make a major bottom, I would certainly recommend that you take a look at it, because these longer-term charts don't look nearly as bearish as what they're telling you on the TV with Bloomberg and all of the other things. I've noticed here in Arizona, Bloomberg has stopped coverage on Sunday night, which is really quite amazing. They put in full paid advertising, so I don't know what brings that about, but we don't start getting Bloomberg here till about 3 in the morning now, to give us information of what's happening, in the world. Okay, now the next one I wanted to talk about. By the way, someone asked a question about had I seen the thing on 60 Minutes last night about the National Security Agency and how they do the spying stuff. Boy, that was probably one of the best 60 Minutes I've ever watched. Folks, if you're ever scared about cyber terrorism, you should have watched that, because it literally scared me to death about how they can shut us down and just destroy our economy overnight by shutting down our computers, and how they go about, stopping some of this stuff. You talk about high-tech stuff. This goes beyond belief. And what they do, I shouldn't be talking. This is market stuff, because it's cyber terrorism we have to worry about. They hire brilliant high school kids, these savants, and they give them these problems that they can't solve. And they said invariably they'll have 10 or 12 of these young kids in there that'll actually take and solve the problems that they can't solve at NSA, because they look at it from a different perspective. And it was really incredible to watch the stuff that went on. So I know that Snowden, blew the whistle on them about what they're doing and stuff like that, but they have a job to do just like everybody else. And I frankly believe that you have to find out, what your enemy is doing. If you go back to The Art of War with Sun Tzu, it says, keep your friends close, but keep your enemies closer, because you want to know what they're doing. And that's the main thing that you have to keep in mind. I worry about cyber terrorism, not so much about it, because the fact that when it does happen, they're probably going to shut us down for quite some time. If you remember Y2K, that was going to be the end of the thing, and Y2K was absolutely, nothing. I don't know what percent of these guys are, there's brilliant young people in the world. You can see it from what you're looking at. I mean, it's amazing. I have to tell you one other thing that happened on our trip is we were going through San Francisco visiting family for 4 days. We looked at some property in downtown San Francisco, some condos, and man, they think stuff is expensive there. They should see what it is in Hong Kong. We saw places in San Francisco for 900 square feet that were selling for just about $1 million, and they would be $3 million in Hong Kong. So there's a big difference in property values all over the world. Even though San Francisco is expensive, it's not near as expensive as Hong Kong or London, and it's still, they say, 25% under the highs of 2007. But who knows? We'll have to wait and see, how this thing works out. I would like to mention one other thing. I wanted to go back to the Japanese yen here to show the fact that we made a huge double top in this Japanese yen. We talked about this in the newsletter last week. It was very important because of the way the double top was made, and the fact that the Nikkei Dow has a 95%, between 90 and 95% correlation between the Japanese yen and the dollar. So when the yen goes down, the Japanese yen, the Nikkei Dow goes up. So the correlation is very, very strong between this cross rate and the Nikkei. So this is indicative that the Nikkei is getting ready to turn down. And with all the indices in the world being up last night, the Japanese market was down about 1%. So whether that's a significant top, we have to wait and see, because they're still, within striking distance of these highs. They could easily turn, and go up and make new highs without any trouble at all. So it's with the question, how many days are we going to rally? And if this is a big bottom, it'll continue and probably make new highs here in a few days, and that will dispel my potential for a high. I just think it'll put it back a little bit, but I still think it's coming. Whether it's going to happen here in December or not, I don't know. December is a positive month, as I mentioned. when you have a positive December in a positive, or the odds of a bad December in a positive year are very, very rare. So we're probably going to close higher in December, even though we started the month, a little bit shaky. We have to take those highs out of late November, early December, and then we'll be able to say whether we're getting ready to move up or not. Now, the next currency that I wanted to cover is the euro, because that is usually the opposite of what the U.S. dollar is doing, and we've talked about this many times. In the long-term daily chart, the euro has made the 61% retracement. If you give me 1 second, I have to take off the lines that are here, and you'll be able to see that the euro went up, and we've tested the 61% retracement, and it looks like we're getting ready to go up and make a double top, which we've already done once. We got a caller from New Jersey. Dan, are you there?
I am.
What can I do for you, my friend?
Well, Larry, I was wondering if you have anything in the Bradley model or your own P-index states, whether you think we might possibly, even over the next month or two, dip down, but then maybe March or April next year test these highs.
Well, we certainly could do that. Now, what I'm watching now is the main thing that I'm watching here, Dan, is that the Dow Jones Industrial Average has made the 1.618 expansion from the June high, and the reason why I'm looking at that is because that's the one that everybody reports on. They don't report on the New York Stock Exchange Index, which is the best one to look at. So as long as we don't get above 16,200, which is 300 and some points away from where we are now, I think we've made a pretty significant top, and we'll be down into January. And then whether the January effect will have any effect at all or not, I don't know. But the Bradley model has flat been off by more than a month, and that's very unusual for that model to do that. But that does happen, and so I can't rely on the Bradley model when it's not spot on, and so I have to go to the patterns that I look at, and that's what I follow the most.
Okay. All right.
Does that help you any?
Yeah, it does. I mean, I guess just wait to see, and
that's what I'm doing. I'm waiting to see these rallies. See, we had a rally that started on the new moon in December the 2nd or 3rd. It went up until the 7th, and then it turned down into the 13th, and so we have a full moon now, and we should rally for a few days and then start to turn down. If we take out the lows that we made just last week on the 13th, which was down around 15,700 in the Dow, then we're going lower. But I think we're going to have at least 10 or 15% correction on the downside, but we'll be seeing seeing what we're looking at.
Okay. If you have time, could you take a look at UVXY?
Is that UVXY?
Yes, sir.
Okay, I'll put that up after the break. Stay with us, Dan.
Thank you.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've got Dan from New Jersey on the line. Dan, are you still there?
I am, thank you.
Okay, Dan, the UVXY, I assume that's a leveraged ETF for the volatility index?
Yes, sir.
I really like this pattern. I mean, of course, I like the VIX anyway because the VIX is, actually holding its own today with the market being up so much. But this being a leveraged one gives you a lot of bangs for your bucks. I think you could easily go back to 40 in this without any trouble at all, and your risk here is only a few dollars. So I like this. This looks pretty interesting to me.
Well, Larry, I think after, losing quite a bit over the past year, I'm finally starting to wisen up because I don't care where it's going. I just wanted to help about setting a stop.
That's a smart thing to do. Is don't be trade what you see, not what you think. That's what I try to do all myself. But the problem is you always have an opinion, especially when you're writing a letter and people are asking you a question. You have to have an opinion. So what you try to do is to support it with some risk controls. That's really what you're looking at. But this particular one, as long as you stay above 18, this has got a really big chance because if there should be a surprise in the market, this thing could really take off. You look at what happened during August. It went from 27 to 47, and then in September it went from 26 to 46. So this thing could move 20 points, double in price in just a matter of a few short weeks.
Okay, so if I set a stop at like 1790.
Yeah, anything below 18, just don't put it at an even number. Put your stop just a little below 18, I think. You know, the fact that it's not getting absolutely massacred today with the Dow up 137 points is a good thing, I think. That would be the first indication that there's somebody in there supporting this, and they're supporting it at a pretty good level, because usually when we have a big sell-off like this would really get hit badly. As you can see, you know, some of the days in October when the Dow had 100-point moves, this thing got massacred, and that's not happening this time.
Right.
I don't know if that's false. I don't know if that's false hope for you or not, but just looking at it from a technical perspective, someone's got to be in there supporting it at this level. There might be low volume or something, I don't know, but this looks interesting. It really does.
All right. Thank you, sir.
You bet. And have a happy holidays, and thank you for calling in.
You too. Take care.
You bet. Okay, folks, I finally got this machine working the correct way, and here we are at the end of the show. I wanted to add one more thing, and that is when we're talking about these foreign currencies that we look at, they're traded 24 hours a day, 5.5 days in a week, so they give you really good spots to look at these certain things. I wanted to cover the bond market before we get off base here a little bit, because we're having some pretty good moves in the bond market here. We had a big move after the FOMC meeting last week when they did their thing. They're meeting again this week, but the overall pattern in the Treasury bond market is incredibly bearish, folks. We're looking at higher interest rates regardless of what the Federal Reserve is trying to tell us. This market can't get out of its own way. It's got lower tops, ever since October. And we started to make lower bottoms in November, and so this market is starting to turn down. I know that mortgages on 30-year bonds are now approaching 4.3, which is a big move. Since where they were below 4% just recently, so that's a 10% increase in mortgage rates for the 30-year. The 10-year are almost the same, so interest rates have started to go higher. That's the bottom line of what we're looking at. I want to end the show to keep in mind, watch the gold here, folks, if we test that 1200 level one more time. Live every day in an attitude of gratitude, and may God bless.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage of TFNN.com to sign up for this once-in-a-lifetime opportunity.